Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny and Bert, the Dividend Diplomats. I'm going to talk to you today with Lanny, of course, not just me talking, about one of my most frustrating dividend holdings. It's in my Roth. It's yielding over 5%, but this stock, Lanny, just continues to piss me off. It is trailing its peers, and you know what? I'm just here to talk about it.
Bert wants to talk, guys.
I
So
do.
hit that subscribe button. Give us a nice thumbs up here. Bert's got a frustrating stock holding here in his portfolio. He's owned for, I don't know, Bert, over a decade now.
Yeah. Yeah. It's been a while.
Yeah.
After I
Yeah.
bought this one after a major event that happened, that caused the stock price to tumble, thinking it'd
Yeah.
rebound.
Bert loves when oil gets on animals.
Well, we'll just rip the Band-Aid off. No more suspense. We're talking about British Petroleum, ticker symbol BP. And for the record, I do not like oil spills. I do not like animals covered in oil.
Bert
I
owns,
didn't
Bert
think, I didn't
owns.
think when I recorded this, I was going to have to explicitly state that, but here we are, everybody.
Disclaimer. This is a video for kids, right, Bert?
Yes, this is a video for kids. So, yeah. Anyway, BP continues to be holding. It obviously had the oil spill, that massive oil spill a decade ago that just held the company back for so many years. The settlements, the amount of payout were terrible. They still paid a great dividend, but there was no dividend growth.
Yeah, Bert's still getting that oil out of his hair.
Yeah, you're gonna really ram this one in the ground, aren't you, Lanny? You're just gonna keep going with it. They increased their dividend. COVID hit. They stopped. They cut their dividend. Now they're rising it back again. So why am I so frustrated here with BP? They did just announce a 10% dividend increase. That yield is 5.34%,
Huge. Let's go.
but the stock just fell. Year to date, it is down 5.6%. Year to date, it is down 52 weeks, and year to date, it is down 7.48%. It is trailing the performance of all of its peers, including the Exxon, Chevron, Shell, Total, and is there a sixth one that I'm missing here? There's
Oh,
BP.
I'm sure you can talk about Marathon, or you could talk
Yeah,
about,
they're
you
prop.
know,
They're prop.
Sunoco.
Yeah, they're probably trailing them. So that's obviously not great. So what has gone on over the last year? I actually honestly thought, Lanny, BP was turning it around. BP and Shell kind of had one same plan that they had together. They were going to shake their dependence on oil and gas. They're going to build towards a renewable future and a more balanced company that's going to help you transition as we into the new era of different types of energy. Well, lately, from what we've been reading and what we've been seeing, they've been pulling back from that. They have a new CEO this year, and with major oil and gas projects becoming more profitable, people are going back to they can't stop the oil. They can't stop that drip. They can't stop going back to the easy money here versus building towards that renewable future.
Well, Bert, if it makes you feel any better, I usually get my gas at BP. We're a heavy BP area here in Ohio. Between BP and Shell and maybe some Marathon slash Speedways.
Mhm.
We don't have the benefit of any Chevrons and really a
Yeah,
couple of Exxons, maybe here and there. Very scarce here in Northeast Ohio. So,
yeah,
Bert,
I would
I can't
agree.
remember the last time I didn't get my gas at BP.
Well, thank you, sir. If only the stock price was doing as well as you were with supporting
Yeah.
it, it really flowed
So
through.
the stock slides, Bert. We got some
Mhm.
CEO changes at the helm. As you indicated, previous CEO really big into renewables. New CEO is like, let's just get back to the oil, the hustle and bustle.
Mhm.
Um, you know, like you said, Shell's doing okay this year. 8.5% up almost 18% last year, up 30% in 5 years. You probably remember when I was buying Shell
Yeah.
stock at a certain price point and trying to grab a couple shares here and there. Um, and then, but Bert, I mean, their
Yes.
net profit is up though for BP in their latest earnings release, still generating almost 3 billion in profit. Like you said, they just gave more back to shareholders, a 10% dividend increase for the BP shareholders, and net debt is really staying consistent. They're not They're not increasing that debt to equity ratio by any means at all. So they're managing that balance sheet, it seems like.
Yeah.
So what do you think gives right now with BP?
There was an interesting article I read. I forgot which bank it was. It was one of the investment banks that were covering it, said that there was an interesting nugget. They've had massive share buybacks over the years. They've been propping up that share price by buying back stock while it's so cheap. You know what? There was a nugget that there was questions in 2025 about their ability to fund those share buybacks. So, are the good times coming to an end for BP? Are they going to be able to
Can't
continue those
fund it with the
buyback?
share, with the cash flow, huh?
Yeah. So why does that prop up the share price? Because the total number of shares outstanding are decreasing. So the denominator, when you're calculating the price per share, is decreasing. Decreases when you buy back shares, so the price goes up. If you can't decrease the share count, price remains the same. Then it really comes down to, can you grow the equity? Can you grow the value of your company organically? Can you big projects make enough money, make enough cash to keep the business boosting up? It's interesting that that's getting called into question by some of these analysts.
Well, Bert, I think we still need to see if this is a cheap dividend stock to buy. We've looked at Chevron recently. We've looked at even Exxon, I think, recently. What about BP? Are
All
they a
right.
high flying, dividend yielding, undervalued, cheap dividend stock to buy right now in today's ever so green market? Do you buy a dog when they're down in the trenches? Let's dive into the screener, Bert. The three metrics: price to earnings ratio less than the S&P 500, dividend payout ratio less than 60%, history of growing dividends. Plus, we'll look at that dividend yield. What does BP look like, Bert?
All right. Their price is 33.50. Seeking Alpha's earnings are $4.18. P ratio of 8.01. Remember, they are an international company, so depending on which site
Wow,
you use, they might have a slightly different
great.
version of it. But yeah, an 8 PE ratio right now is phenomenal. Yes, you can say it is absolutely cheap compared to the market.
Yeah, I could not argue there. I think it's very inexpensive. Now, the dividend yield, or to get into the dividend per year, paying $1.79 ish for the year, of about a 43%
Yeah.
ish dividend payout ratio. So pretty safe dividend right now.
Yeah, and as I said, they've been increasing that dividend for 3 years now that they brought it back up after they cut it initially there in COVID. Their growth rate, it's an international company. They just announced 10%. It's always hard to peg an exact one, so I just said it's mid-single digit. I said 5 to 7% dividend growth for BP.
5 to 7.5%, guys. Well, 5.5% dividend yield almost, between 5.25 and 5.5%. Year to date, again, down. Last year, they're down 52 weeks, or 5 years, they're even down. It's 100 billion by market cap company, guys. So overall, right now, you got very solid dividend stock metrics. So as it's been hard to find a dividend stock in today's green stock market, again, let me just check in for
Yeah.
base reference here, the S&P 500 right now, 5570. We are filming this here on
Mhm.
August 20. What is it, the second today?
Yeah.
So, we're up 17.5% with this stock down, 5.5%.
Yeah.
It could be a good time to really consider adding more to your position, to be honest, Bert.
Yeah. It doesn't look terrible here. There's a fun little thought that I had just going through the exercise, Lanny.
How many
That's,
shares do you own?
oh, that's a great question. That was not the exercise I was going through, but
Convert calls. Convert call.
yeah, no, I don't have enough for cover calls, but
But you
the,
can. You don't have 100
yeah,
shares of BP?
I don't, I'm pulling it up now. Easy. Oh, oh, I've dripped over it. I have 101 shares of BP. There it is. We need to get you a new sweatshirt for these videos, Lanny.
Yeah, this thing's
Seen some
I'm
better
wearing.
days. But I was going to say, the interesting piece is if BP continues to struggle, there are five other major integrated oil companies. Exxon, I just looked up their market cap's 500 billion. Chevron's not that far behind it. Is there an acquisition target maybe for BP for a company that's looking to get into this sector?
But I think you should buy 100 shares of BP.
Maybe community. What do you think? That'd be a fun one in the comments. Should we buy 100 shares of BP? Hmm. Should we end it there? Should we just?
Bert should whale it, guys. Let us know. That's the video right there. We'll throw the metrics on the screen. Should Bert buy 100 shares of BP and make a huge splash in his portfolio? adding a ton of dividend, adding a ton of possible dividend growth, plus possible share appreciation growth as a potential merger target.
All right, everyone, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats, over and out.